Hey guys, Rob Mitchell here. Thanks for joining me for this mini day trading webinar using NinjaTrader Trading Systems. I want to show you some really cool things, broad concepts in trading that make a difference and more. Yeah, and more. Let's take a look before we go. Past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. Yeah. In this video, I'm going to share important day trading concepts, advice, and secrets that can help you up your trading game. You can benefit from the concepts here, whether it be in the E-mini, S&P, crude oil, or any reasonably volatile futures market that you can day trade in. It involves aligning yourself in a positive way with traders who can carry your trade to success. This is a super important concept in trading, and you can also use this method to understand other key market concepts. And also, if you get the concepts in this video, it can help you to learn other things too, because you'll start to notice all kinds of actionable trading patterns if you get down some of the concepts we have in this video. Now, recently on this channel, I did a video on what is the probability of getting an encompassing pattern in price structure. I'm going to show you what that is here in a minute, just briefly, and then I'll go on to the concepts. But you can also go find that other video if you want to and study that as well. Probability of getting encompassing patterns in price structure. I've also recently taught in these videos how important it is to ask the next question. How can I use that information? How can I use that information? So as I go through the concepts in this video, you want to be asking yourself that question. What can I use this for to make all these little portals of learning and information open up? Yeah. So if the probability of getting an encompassing pattern per the video that I did previously is roughly 5%, then you might ask, the next question might be, well, why would anybody want to go against that? Yeah. Why would anybody want to go against that? Now, this is an interesting thing because an encompassing pattern happens in the counter trend. Like I said, we're going to take a look at that in a minute. And today's a pretty good example of it. But why would you want to go against something that's only 5% in your favor? And even if you stretched it out and said 10% in your favor, why would you want to even do that? It's 90% against benefiting you. Yeah. So why would you want to take a trade that is 5% in your favor? So, and how does this relate to the idea of the old saying, the trend is your friend? Yeah, and we're going to see a great example of this today. Today's video is using a trading system that uses 4-quadrant trading system design approach from IndicatorSmart. You can go over there, it uses trading room pack from IndicatorSmart. So let's look at the basic market structure that is involved with this concept and what is the basis of the T2 pattern that we've taught on this channel since the very beginning. In fact, when I started the trading room 11 years ago approximately, the T2 pattern that I'm also going to show you here in a second was the pattern that we use, and it's never changed in all this time. Yeah, it's still one of the bread and butter patterns that we teach. So, and how are all these things connected, and why is it important? Okay, so let's go take a quick look at the chart for today. This is a crude oil chart from the trading room today, and it just happened to have these things on here, and we discussed it in the trading room today. So when the market started trading this morning, it had been going up overnight, and it just lollygagged up here, or whatever word you want to use for it. It just stuck there and didn't really make much progress in A period. In fact, that A period had been one of the smallest A periods I think I'd ever seen. It was like 16 ticks, and that just pretty much doesn't happen here. Now, this pattern where you see these tails on these bars up here, where you trade both sides of this prior structure in one run, that's what we call an encompassing pattern. That's what we call an encompassing pattern. You see it again here. Doesn't happen that often. Here's a bunch of structure over here and a bunch of green bars in the counter trend. It's going in the opposite direction, completely encompasses that whole structure right there. So you have this area and you go outside and then you cross it. Same thing here. You have this region up here, and then you take out the high of it right there, and then you cross it. And I got another one over here, this whole structure right here, and then you go out the bottom of it, and then you cross the entire thing in the structure. That's called an encompassing pattern. It can be a little bit hard to see at first, but once you see it, nobody can take it away from you. You own it for life, and that's the general pattern. Now, we know that this encompassing pattern is a break of market structure, of consistent cycling market. The rest of the day here, the market goes A, B makes a low, C, D makes a low, E, F trades inside, and then does it again, and then makes a new low, and then comes back inside and makes a new low, comes back inside, 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 makes a new low. Makes a new low. So this entire structure from here down is what I call an intact structure. Now, when you have intact price action structure, what's going to happen is the cycle is going to widen. The cycle is going to get wider. The point from red reversal bar to red reversal bar in these cases is going to get wider than it was previously, generally speaking. Now, the tool that we use to understand that and to put it in our face in a really seeable way is the smart momentum from IndicatorSmart. Okay, so this comes down, it makes this encompassing pattern. This momentum goes out of bounds here, and then it comes back the other way. So this being lower, this being inside, and then this is not inside, it goes outside in the counter trend. So while the market's going down, while the market is going down, the momentum is going up. And we call that a T2. This is a specific type of a T2 that I teach in the trading room. And then this makes a new low here. And then this makes a high again, comes back up inside. Actually doesn't make a high, it defends, we call that defended. And then the momentum goes higher here. Okay, and then it comes down here. I marked each of these T2 before I did the this little mini webinar. And then this goes higher right here than this one over here, and that's another T2 right there. And then this comes higher here while this is going lower. This is another T2, and then this goes higher over here while this is still inside, makes another T2, intact structure, and then boom, encompassing pattern. Encompassing pattern. Now I'll put this here. We discussed the encompassing pattern that we're getting on each side of this clean cycling, the encompassing pattern, cycling, and then T2s. T2s tell you that the cycle is widening, and when cycles widen, that often happens before the trend expresses. So widening cycle begets range expansion. And I've been teaching that. In fact, my entire career, at least in some measure, is based on this concept. We get the encompassing pattern over here, we make a new high over here, and we pick up the T2 here with the momentum going lower over here. I also label this one as a T2? I could. This is a special kind of a T2 that I teach in the trading room called a slider and a non-cycling type 2. But if you were to trade these, I would use trade markers and mark these if we want to. We were to trade these on the reversal bars, on the reversal bars, on the reversal bars, on the reversal bars, and on the reversal bars. Those would be the trades that would happen for the day. So let me go from this and go back to the presentation here and cover a couple of points about everything that I've shown you. You can go back, you can pause the video and take a look at those things, but I'm going to cover some of the concepts that could tie this all together for you, okay? Intact structure has a counter probability associated with it in many cases that support trend continuation. That's the whole point of this video. 5% of the time you get these encompassing patterns, and the rest of the time you get intact structure. And I said earlier, what was the question I was asking? Why would you want to take a trade that's 5% in your favor when the trend is your friend? The trend is your friend is another way of saying it. Okay, so intact price structure has a counter probability associated with it that in many cases supports trend continuation. I'm going to say that in yet another way, and then I'm going to move on from that. If it's only 5% for it to break the structure, then when the structure gets defended and I'm getting cycle expansion that begets range expansion on my T2s, then this is a powerful trading system using the 4-quadrant method. That if you want to learn more about that, you can go over to IndicatorSmart and read about that. Okay. Now, when the intact structure is violated, in other words, you get an encompassing pattern or you cycle through it going the other way, there's usually a higher time frame or a counterparty associated with it. Or you've got the expiration of expected ranges and the market's just going to turn and go back the other way because it's not statistically viable for those who manage the risk according to probability factors like we do. Okay, so these factors make the prediction of market structure as predictable as other kinds of support and resistance in our experience and sets the stage for ongoing prediction as a market naturally cycles towards the completion of its daily expression like we looked at today. Yeah. Beyond this, there's other benefits that you can get because once you know this, as I was suggesting to earlier, then when you see this happening on the charts, and then what happens is you see it forward in time before it happens, then advanced learning becomes possible. Further, if you got a good tool set like the one that we're using here, the order flow, the momentum, and momentum anomalies and inflection points on the chart will show their hand to you. So when you're looking at the chart, it will be confirming all these things to you on a level that you would normally never be able to see. You know, but it's because you had learned this market structure and these probabilities and the price structure first, then that provides a kind of a tree that you can hang all these other things on. And so you get advanced learning and insight as a trader, and that's how you become a master trader. This is the little place where you stick the crowbar in and you can lift 1,000 pounds with only a couple of pounds that you're pressing down. Further, you can often see specific sequences on market structure that are the precursor to market trend changes. And there's a whole statistical profile and different ways that that happens that is actually pretty consistent. These factors are related to other statistically common and thus predictable market behaviors. It's super cool when you get your trading and understanding to this level because you start learning at an exponential rate effortlessly. Yeah, I teach these concepts and more advanced technologies, trading secrets and tips and associated nuances in my trading room daily. Okay, so let's go over it again. Encompassing pattern, and then you get a non-cycling type 2, and then cycling, 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 encompassing pattern, and then non-cycling type 2, cycling, cycling, cycling. And this is extremely common. This is the way markets express themselves. And there's all kinds of other statistics and things that we know as the market carries out this behavior of cycling. I didn't bring into this discussion the trap trader oscillator, but there's all kinds of patterns within this that can help you to see and understand these kinds of things as well. But the basic concept here is cycle expansion begets range expansion or comes before range expansion, and the market turns in certain kinds of ways, and encompassing patterns aren't normal. So when you have a 5%, that this would go break this structure. This would go break the structure. It's not, it just generally doesn't do it, and you get clean cycling through this portion of the day, and it happens like this all the time. It's super, super cool. Yeah. So, if you're interested in learning more about that, come on over to the trading room and join us. Yeah. It's a pro room, and we got a lot of this kind of learning and analysis in there with associated nuances in the trading room. So today's video took advantage of powerful features using smart trade markers. We didn't do a trade marker report or anything like that, but trade markers is really at the key of us learning these kinds of things over the years. You could take a look at that at IndicatorSmart. Using trade markers has been a big game changer for a lot of traders. It helps you to know what works, what doesn't, and how to execute it to your best advantage. Today's video also utilized Smart Super Renko, Smart Price Bars, and Smart Momentum that we used. And the indicators on the chart there were from the trading room pack at IndicatorSmart, which we generally recommend if you want to have a complete tool set that gives you all kinds of levels of support, resistance, and different, we mentioned like counterparties and things like this in the video. Yeah, thanks for joining me for this mini webinar on The Trend is Your Friend. Yeah, all trading resources are available and can be found at indicatorsmart.com. Thanks again, and we'll see you on the next one.